All right, so you're saying that we could be entering a new geopolitical risk supercycle. You say what you call significant risk events. They pretty much tripled since 2010. What does that mean for investors? Does that mean there's more opportunities or they should be more defensive?
Well, let's start with the first thing first. The fact that we've been able to establish an empirical basis for the idea that we are in a geopolitical risk supercycle is something that hasn't been available to investors in the first place. And part of the reason for, I think, the confusion about what geopolitics means for investors is the sense that it's the same thing as news flow and that it's noise and not signal. So, before we think about implications, I think what we've been able to do with this research is substantiate the fact that geopolitical risks can be measured and that they've been rising, and it predates the Liberation Day tariffs.
All right, so it predates that. So with so much uncertainty right now, where's a safe place to put money? Are there certain markets, whether it be, based on nations like the U.S. or Europe, or are there commodities? Is that a safer play? I mean, if there's opportunity for investors, where can they find it?
Well, what we're suggesting is that you need to apply a geopolitics lens to thinking about these questions. We can see what kinds of decisions investors are already making, piling into gold. And the fact that there is maybe a sense of new safe havens. Obviously, certain sectors benefit from what is obviously a security-led order. So we see more moves in defense. But what's interesting to me, Frank, is that there's interest in Europe like we haven't seen for some time. Even the UK, which has still suffered a hit post-Brexit, and in other countries that are seen as, frankly, providing more certainty on policy and political stability than the United States. And that factors into this sense of whether the U.S. exceptionalism trade is over.
All right, so you say global risk seems to be a driving force for the market, but our existing tools to measure it, they're kind of backwards looking. So what's something that gives us a more accurate picture on exactly what's happening?
Well, what we've done is create an aggregate indicator, first of all, drawing from existing open source data, and that all sounds quite technical. But again, the question that I hear most often is geopolitical risk real, and is it the same as news? And what we are establishing here in this report is the definition of geopolitical risk, which is what countries do to project power beyond their borders. And in a more competitive and more contested world, there's going to be more of this. And we should be reading the president's tariff policy through this lens. He seeks to increase the U.S. competitiveness by applying tariffs. But again, the use of tariffs and sanctions is something that we've seen increase several times over. Trump has just made it official and really put it on steroids. And that suggests, Frank, that we're not going back to some kind of golden normal era.